Hello, everyone. Welcome to a new episode of One Vision, the Fintech Fuse. This is Theo, your host for today. Joining us on the show is a longtime payments guru, a fantastic, absolutely amazing, downright just great person. How many adjectives did I use? Carol Grunberg, Chief Business Officer from and just knows everything about payments. She can talk to you from payments from day one, all the way to where we are right now to beyond where we might go. So without further ado, thank you so much for joining me today, Carol.
Thank you so much, Theo, for doing this. I'm super excited. And actually, day one of payments was 5,000 years ago when we bartered cows. So I can't go back that far personally, but I hear you. Yeah, I've been doing this for a while.
You've been doing it for a while, and for good reason, because we need you. So let's go right to it. Recently, we just wrapped up Money 2020, aka payments, fintech, banks, financial services, everyone just get together, congregate in a really vast space and exchange ideas. We managed to see each other briefly in the hallway, said hi, and that was pretty much it. That's how it's always been. I used to joke to people, if I just stand like right there under between the hotel and the convention center, just stand there for an hour, you can meet everyone you need to meet within, right? So tell us.
What?
Yeah.
That's actually one of my biggest observations. So you're spot on. I've been going to Money 2020 since 2012 when it first launched. So every year since. And this year, what I noticed was that I don't know what percentage is, if it was 50% or not, but more people than I've ever seen didn't have badges and were congregating at the entrance or by the Illy, right, cafe in the Venetian. But I thought that was extraordinary because more people, more companies than ever sent huge cohorts of people. But at the same time, many people showed up without badges, or organizations didn't buy them because they rented out the restaurants and the cafes and they had the suites, which it happened in previous years, but this year was next level. A number of people that were just there and just rented the hotel space and were having all their meetings there with people that didn't even have badges. So it speaks to the importance of face-to-face and how desperately at this time as things are changing is we need to see our partners, we need to see our clients, we need to see our peers, our friends, right? And so that to me was really what was most pronounced, is like people were there to physically see each other, which is, it's interesting, right? Because yeah, I mean, I think that was the main thing I saw. And content-wise, I have some observations as well, but this was just more on the people just wanting to be in an unprecedented way. Yeah.
I agree with you. I do have one gripe though, because remember in the old days, you could actually meet friends at a restaurant for dinner. You can't do that anymore. Everything got rented out. Everything, it's like, fully booked because, someone wants to host something, which is great and wonderful, but I need my space. I have my normal hiding space and they're all gone. And you're right. There's so many people by the Love Sign, by Illy Coffee. It's like, do we actually really all love each other, or just that's a convenient way to meet? So let's talk about content. What stands out for you this year?
So I'm actually going to give a shout out to Frank Young on this one because he made a really keen observation, and who's another fellow former Googler actually, and he's an amazing just human being and payments guru himself. But he made an interesting observation that it was a lot less about transformative aspects of what's happening in payments and a lot more focus on interoperability and APMs. And he's right. And I think we've seen this trend globally, right, where we know that APMs from the payments world are very important. I did have my career in Asia, so I see this firsthand, and I'm really focused on Latin America and global. But just like how networks are interoperable with each other, credit and debit, but this is kind of like the next wave in a way, is APMs. How do you get APMs to be interoperable with each other when 50% of the world operates in a mobile wallet? They don't have a physical form factor to pay like a credit or debit card or even a virtual debit or credit. Everything they do is either bank to bank through mobile wallets. And so that was one of the most resounding new trends, so to speak. But also it meant that there was a greater understanding of the impact of the global community and payments, not just the East, not just the West, US and Europe really driving consumption, but more so how other markets emerging or in the East are also driving behavioral and payment changes.
I love that point. Interrupt. We see and hear that a lot. We feel it, right? Because we travel. We're like, all right, this is not working. There's got to be an easy way. Um, but now to see that being in the forefront of a lot of discussions, interoperability, even like from a digital assets point of view, right? How do we get seamless transfer of assets from one jurisdiction to the other? There's a lot more of that. I think our world is way more connected
Yeah,
than some would like to believe. And so all of this is fascinating. And I'm going to give they were not in the show Money 2020, but they were constantly on my mind because every time when I go to Asia, I see Alipay Plus sign. And I will give
yeah,
them a shout out because I can't remember if it's like maybe a year or 2 years ago, they came out with this concept. Everyone is familiar with Alipay and the wallet, but what they did was they create and I'm gonna get smacked because I'm probably gonna use the wrong word, but more like a network, right, of
yeah,
mobile wallet providers. So if you're
yeah.
on Alipay Plus, you can be Gcash, you can be any of the other Southeast Asia mobile wallets, Japan and even Korea and what have you. You can travel from one country to the other and still use your local wallet, use your own local currency as if you're
That's right.
home, but you're in a different country. That's amazing. I want that. Like, I would love to
Yeah,
have that.
and I was at Alipay, and I built out the early days of that when I was head of growth for Ant, which is
Mhm.
Alipay, right? And leading all those mobile wallets. So Alipay and Financial has 10 mobile wallets, and you named a few of them: Gcash, Touch and Go, Easy Pesa, CacaoPay, Paytm, Dana, and I'm missing Bcash. Um, and so, but yes, that's right. They were building out this network of, on one side the merchants and on the other side the wallets, and essentially enabling them to work wherever the other did. So an interoperable, exactly, mobile wallet, mobile wallet layer, which is fascinating. And I think we're going to see more and more of that starting to happen, because it has to happen. Just like my Visa or Mastercard, or can be accepted everywhere, as should my Alipay, right? Or my PayPal or my whatever I want to choose. If there's money to be had, a merchant wants to be able to take that money. They want to be able to sell their good or service to the consumer in any way they want to pay, right? And so it benefits everyone. So, but yeah, I think there's a lot of things we need to sort through as standards, but it is the interoperability piece, right? Because a lot of these APMs, there's no standard around them, right? So for example, Alipay, has a 24-digit bin. Credit cards have 15 or 16, right? Some other APMs might only have 18. So when you're trying to process one of these things, technically you have to be able to identify them in your network to be able to process them. And without a standard across them, except for the Alipay Plus wallets, as you mentioned, it's really hard to make them interoperable. So there's a technical element that's also integral to making this happen, but people are starting to think about it. And so I think over the next few years, we'll see more and more of this.
I would love that, right? For once. And one of these days, can we like solve that issue? I don't know if you had experienced that last week in Money 2020, but for me, every dinner that we go to, you end up with a bowl of credit cards. I swear. We were laughing so hard. I think at one point we might have taken a picture. We are in a fintech conference and you have a bowl of credit cards and you have a bowl of credit card receipts times two. First of
Right.
all, we really shouldn't have to sign the
Yeah.
receipts anymore. Not to mention it was chaotic and it's funny. And I'm like, for all the years we've been going to these conferences, this is still one thing. One of these days we need to solve. I don't know.
Yeah.
And
One thing I love in China, you go to a restaurant in China and they have the QR codes on the table. So
yes,
after COVID, now we have QR codes to look at the menu. But in China's had this for years. There's a QR code, but essentially whoever scans it, you order and you pay directly in that moment. So you could go to dinner with 50 people and you just pay for whatever you want, right? Through your individual QR code at your seat. But yeah, so, not, but we could easily do that in the US if we wanted to, right? The
We
functionality.
could,
Yeah.
right? We could.
Yeah.
Speaking of, so I do visit Hong Kong quite a fair bit, and in the last 2 years, everyone has shifted to pay me. And so at the end of the meal, they're like, "Oh, let me pay you, pay me." And I'm like, "Okay, what on earth is this?" And I finally last year, I signed up for um, a digital bank, which actually is run by Standard Chartered, because now finally I can actually use an app to split money with my friends instead of giving them cash. Every time when I take out my wallet and I give them cash, they look at me like, "Theo, what country are you from?" So I do get a lot of that overseas, and I'm sure you've seen a share amount of that too. So what else
Yeah.
do you see in 2020 aside from I love that trend that you just talked about, interrupt?
Interoperability of APMs. Yeah. Yeah, I think the human factor, right? Interoperability. What I saw less of actually is less talk about blockchain and Web3 and AI than in previous years, right? And part of it I think is because some organizations are getting comfortable using blockchain, right? Technologies, or some are like, no, we're just going to upgrade our existing infrastructure and not think about blockchain. There's still, so, but I saw a lot less of that. I didn't see new emerging themes, I would say. I thought the event was amazing. They did a great job this year. But new themes, there weren't that many like buzzy things I noticed. Did you pick up on anything in your sessions?
No, but I think we might also be getting jaded because we have been to too many of these. After
Well,
a
but I
while,
think
they all
it's also
blur together.
Well, but I think it's also that I don't know about you, but 75% of my like it was just meetings all day long,
The
right?
meetings
So,
too. Yeah.
and I think that's I really enjoyed the opening keynote. That was great, right? The director of CFPB, especially at a time when there's a lot of interesting things, particularly in the US happening, right, with open banking. And so the fact that Showbit was there to open the event was very interesting. Um, President of Dow Jones and of the New York Stock Exchange, they were both there as well, talking about the economy and the sense that over the next few years they believe there will be more fintech IPOs, based on the trends that they're seeing. At least there's some in the pipeline coming, so that was reassuring. um, but I didn't go to that many content sessions besides a few key big ones, so it's hard to say.
That is very true. I think we've gotten to a point, as you say, right, from the very beginning, a lot of these shows is for connections, is networking, is catching up people, is like, just planning and all of that.
Feels
And, you know,
right.
sessions are great, but, it's a human connection. That's what
Right.
matters. I do see and hear a few, not so much so, hey, we're doing AI, but more so we are leveraging the technology as an underlying layer to enable us to do all these things. So is the reimagining processes and use cases that's in the front and center, and then AI and everything else kind of fade into the background as it should be, because it's an enabler, right? That is not the center of the show. It's a tool for us to do something, to go from one to the other. So I saw those, but yeah, it's always an interesting zoo. Um, but it's always great to connect with people. All right, so moving on from Money 2020 to present day, we are almost at the end of the year, so we'll get to the trends in a bit. But you have published something else from Before we go there, tell us a little bit more about and what you guys do, and then tell us a little bit more about the report that you just published.
Sure. So actually, we're Payments 3.0. So what does that mean? As an organization, our product is payment orchestration. So we enable interoperability of PSPs, of card networks, of card types, and of fraud to all work seamlessly together through a single integration. So just like we were talking about interoperability of APMs, we essentially connect to 400 different types of payment providers. And we're across 205 countries. Right now, we're seeing the majority of our flows go through 80 countries. But we're the next level of payment interoperability. So traditionally, and this goes to a little bit of what I was talking about in the ebook and some of the trends is, traditionally, what would a merchant do? First, it would accept, credit cards, debit cards, etc., right? And then they would have to do all these individual connections. That's payments 1.0, right? So you sell a product, you have to take payment 1.0, and you connect individually. Payments 2.0, okay, now merchants are moving digital, and they need to be able, now they're able to offer their goods and services cross border, and it's become a bigger thing. And so they need to be able to accept more forms of payment in a quicker fashion. Doing these one-off integrations, they don't have the engineering teams or the payments team for it. It's just too laborious. So PSPs, and we had a lot of gateways come up, right? And so a lot of aggregators now came up in payments 2.0. And a lot of these aggregators made it even more simple for consumers to do cross-border business, like Stripe and Adyen would be in this category, right? They made it easy for developers to connect, and also made it easy for merchants to have a lot of form. dLocal is phenomenal at this and that town. And I would say that's payments 2.0. Payment 3.0 is now merchants are all, I don't know what the percentage is, but the majority of them, even those that used to be B2B, are now going B2B 2C or directly B2C. Like Toyota, for example, doesn't necessarily need to go through the dealership anymore. It could go direct to consumer, right? And as a result of these, are also online. So being able to access all forms of payment around the world is really important. But even through the individual PSP connections or aggregator connections, it's now like version 1.0 of payments, where it's too laborious. So 3 is where we come in, right? You connect to payment orchestration layer, and it manages all your payments. It's your payments infrastructure. You connect to us, and that single integration gives you everything on the back end. You want to do business in Morocco? Okay, we've got partners there. You want to accept Pix in Brazil? You connect through us. You want to be able to do, take Flutterwave in Africa, you could connect through us, and whatever. So that's essentially what we do. You want to be able to leverage your Stripe and Adyen and global payments and FIS and JPM connections, you connect through us. But then we ensure then that when that transaction goes through, we smart route it. So the merchant then decides they could route it through the most cost-effective path or the highest conversion path, right? Because different providers function differently in different markets, and sometimes even differently by MCC type and by user type. So this level of granularity is really important when you're doing hundreds of millions of transactions. You want to ensure that you get the best provider, the highest conversion rate, the lowest latency, best speed, in other words. And so we handle all of that, and we standardize everything. We reconcile. So you could be having, the 200 providers, and we'll give you statements that are all standardized and accessed for you through a dashboard, and reconciled at the end of the day, so you can manage on the back end your treasury and financial operations. But this is kind of the next wave of where everything is going now that most companies are global and able to do business, and then we do this on both the pay in side as well as the payouts, which is actually unique. We just announced actually payouts of Money 2020, where suppliers, customers, the gig economy, right? People need to get paid. So we do both sides of it. Whether you want to receive payment or you want to make a payment, we could orchestrate it essentially in any country. And that's what we do. It's a phenomenal company. I joined about a year ago, Theo, and having been in payments my entire career, seeing what this group had done, I was so impressed in the team, but also in the technology. So it's an exciting time because it's growing enormously in payments, exponentially.
I can tell. If a year ago, it must have been shortly before we met on the islands, right? That was okay.
It was. That's right.
Time flies. Time flies. It does sound like it's super interesting and something that's needed. I want to almost ask, like, why wasn't this done like 10 years ago? That's a whole different story. Looking back in time, you did mention in the very beginning money from 5,000 years ago, physical exchange, barter, and then to where we are right now. In the middle, we went through some form of paper money, IOUs. I still do paper money with my kids, by the way. but that's a whole different discussion. To, you know, digital payments in all forms and bits and bytes. Tell us
Right.
about the latest ebook, The Payment Revolution. What is it about?
Yeah, it just talks, yeah, again, about the history of money and the trends that we're seeing really in the last 6 years. Because if you think about money,
Hmm.
it hasn't changed that much in about 5,000 years. So from the first barter system all the way through essentially to where checks were introduced, there wasn't that much change. And so I kind of talk about that a little bit, right? But it was one really since I would say the mid 50s, right? When we really started to get credit cards to come out, we had a really different form factor to where we could now start purchasing things as consumers and as merchants accepting payments in a broader array of places. So that was certainly a technical accomplishment. In 1983, the first e-cash transaction was done. And a lot of people don't recognize that, but it was actually done in 83. And then come 2000s now, a lot of things started emerging. Wallets started becoming prevalent. China, I think it was around 98, 99, Alipay that you referred to was launched. Later, PayPal was launched. And so really it's over the course of the last 24 years, you have this explosion of ways to pay, right? From mobile wallets using QR code to contactless with NFC to, and through a whole slew of different types of financial institutions. Neobanks are popping up that are fully digital and offering their ways to pay. To things like UPI in India, where it's financial institutions connecting to each other for seamless exchange of money, PIX doing the same thing in Brazil. And then to places like Nigeria, where the central bank issued their first digital currency, their CBDC. Jamaica also has CBDC, central bank digital currencies. None of this was happening, right? The speed of change is just enormous, particularly as it comes to enabling people to do payments around the world. There are tons of form factors that are sprouting up, and new players are getting into the mix, including governments of certain nations are starting to rethink how they issue money.
I recently talked to a good friend of mine in India, and she told me that there is also a lot of there are two themes to that. One is we are seeing India pushing the UBI. Outside of India, globalization of that Indian stack, which is fascinating to watch. And then you see countries like Philippines, they are actively giving bank accounts to their
Right,
citizens to get them
right.
onto the formal financial services system. So there are a lot of, as you say, a lot of things that governments, from their perspective, are pushing and hoping to get us all onto the digital economy and move money faster and seamless and more efficiently. So it is an interesting time. If we
And
would,
some
yeah,
countries mandated. So in 2018, in India, President Modi demonetized the 500 and 1,000 rupiah note, right? Equivalent of like $5 or $10, let's say. So when you take those currencies out of circulation, you're essentially moving everyone to digital, right? Which is what happened at the time. Paytm was was fairly new, but it gained in prominence. It became number one at that time. Mobile wallet, UPI was starting off. But yeah, you're starting to see more of this mandating it. So, and I think that's a continued trend that we'll see to have broader visibility, but also ease of use at the end of the
hmm.
day.
Well, that's partially PICS too, right? Because that is part of government being in the equation and getting the solution out and to get the adoption rates. It was impressive. It's like what, over a matter of few years, I think it
Yeah,
was.
no, this year it's less than a year old. It has over 100 million users. It's phenomenal. No, Theo, it is phenomenal. In less than a year, it has so much of the population on it. Yeah.
Yeah, that's so why are we still on checks?
Yeah.
Sorry, I have to ask. Actually, I think we know, but it's
Well,
dumb.
okay, so okay, the average age of in Europe is 44 years old. In the US and in Australia, New Zealand, it's 38. You mentioned the Philippines. The average age in the Philippines, and fact check this, is 24. Indonesia, it's 28. In parts of Africa, it's 18. So you have these generational shifts. So just like my kids, right? They're 9 and 10. They will never know a DVD. They'll never watch a movie on a DVD or listen to music on a CD. They're not that generation, right? They only know digital content, right? Well, a lot of half the world's population and the fastest growing consumption groups are younger. They're about 1 or 2 generations younger than those that were, we grew up with checks and cards and so forth. But this new generation will never even touch physical money in the same fashion as my kids will never touch a DVD or a CD, right? To listen to movies and music. So that's what's happening to the world. And that's why I think APMs, again, the interoperability of them is going to become not just amongst each other, but also amongst the broader financial network is going to become even more important because you've got these really young, fast-growing populations that are making purchasing decisions that are going to affect the goods and services that are created and sold in the coming years, because they're the ones that have the consumption power, and they're not paying with credit, debit, or checks.
And they're getting their weekly allowances in Apple Wallets, and also in what else do we do? Amazon Money. For a while, we did Robux. You name it, right? In different forms. Right. But speaking of numbers, here's an interesting number. The U.S. Treasury has issued 45 million checks last year in 2023.
Really?
45 million. Now,
oh my gosh. 15% of the population, right? If we're 3/3, something like that, that's crazy,
right? And a lot of that is issued around the tax time. So if you think about that, right? I always laugh because I always get asked everywhere you go. People are like, "Why are you guys doing in checks?" And you're right. I think the demographics have something to do with it. Although my mom and dad hasn't written a check for years. I think our infrastructure and our habits have a huge impact on it. I have to write a check every month, not because I want to. It's because that's the only way I can move money from between my personal account and my small business account. It will not accept an online transfer until, and you're going to like this, until when I opened up the Apple account, right? And I was like, oh my God, this is so cool. And once you open it, it asks, how do you want to fund the account? And I'm like, all right, well, I don't think this is going to work, but let me try. So I put in my small business account number. Boom, it went. I'm like, oh, this is cool. And of course, within the same bank, right? I tried to move money between my small business and my personal. That didn't work. So now I have 2 ways of moving money. Either the check, which I have to, go to the bank branch to deposit because my small business account does not do remote capture. Or another way is I move money from my small business to my Apple account. From my Apple account, I move it to my personal savings account.
That's right. But, yeah, you in essence use Apple Wallet as your on and off ramps if it were. Yeah, that's right.
But this is crazy, right? If you think about it, it's absolutely insane. And then the other reason why I still write a check is because that's the only way I can fund my 401k. The provider.
Sorry, go ahead. Keep going, Theo.
Yeah, the provider only takes checks in an overnight Dropbox, and it's not a small investment bank either. So I think, aside from habits, I think there are quite a little bit of tech debt that we need to solve for before we can get to all electronic payments. I hope we'll get there eventually, but we're not quite there yet.
No, it's going to take some time, right? But it's an interesting time to do what we do, and I think though, because of the tech debt that you talk about, which is why companies are recognizing that payments is a necessity, but it's also, in a way, something that it's not their core business. So, which is why a lot of fintechs like ourselves and others, though, take on the burden of enabling it to make it easier all right, for companies to do what they need to do and focus on their core business versus having to figure out how do you augment your tech stack, your legacy infrastructure. Shouldn't be worried about that because it's not what you do as a core, right? You sell goods and services, or you offer lending, or you offer cash management if you're a financial institution, but you don't necessarily need to figure out the guts of how payments should be easy for your consumers. Someone else can do that.
That is so well said. It's perfect. So before we end, you have a crystal ball, because you always do.
Mm-hmm.
What are some of the trends that you think we're going to see in the next year?
Despite the lack of discussion around it, I am really bullish on. I do believe that blockchain is going to be people are going to get more comfortable with it. So that's one. I think obviously separate than crypto. This is said frequently, and I'm in that camp as well. Although there are amazing benefits there as well. But on the blockchain side, again, it's either you update your existing legacy infrastructure, you partner with a fintech like ours, or tons of others, or you use a technology, right, you use a technology that is built, right, to have a visibility across every transaction and is immutable. So I do see people understanding that and being less threatened by it, and big corporations are starting to go that way. I think that's one. Two, I think we're going to talk a lot less about AI because it's, to your earlier point, it's going to be integrated in everything we do. So just like Pix, it's got over 100 million users in less than a year, as do the nth number of AI applications that have evolved in the last year. That now, I mean, some of the things we're doing with AI, like we had no idea they existed 6 months ago, and now we're using this technology in our daily lives, right? To do a slew of things to make our lives and personally and professionally easier. So I think it's going to become as inherently built into us as, let's say, Google Docs or Microsoft Office is, right? It's just going to be a part of, you have to work like this. It's a tool. And then I do see that this is maybe 5 years out, that the goods and services that we are going to be ingesting are not going to be dictated by the West. I do believe that there's going to be a change in, the goods and services are created for those with the highest consumption power. And although the West will continue to have strong economies, I do believe as these younger generations and have more are coming into the financial market, more financial power, goods and services are going to be tailored to their needs. So I think we're going to see a very interesting balance is going to happen over the next few years as to the things we ingest in our lives and how we do so.
I like those trends. What do you think about regulations perspective? Do you think we'll see more M&A? Because this year there were two things, right? You see some of the banks buying the smaller guys, right? So that's been ongoing this year. But then from a fintech perspective, we haven't seen much from an M&A perspective. Funding is kind of quiet. Do you think you'll see a resurgence of that next year?
I do see it picking up. And I think this is kind of what I alluded to that I found interesting at Money 2020 in the opening keynote by the New York Stock Exchange stating that they believe that more fintechs are going to start listing because they see them in the pipeline. That was reassuring, but it's, a trigger to the economy. In order for the financial markets to work, there has to be investments made into them, right? And so it's illogical for there not to be. Now there might be a consolidation of that. Surely it might not be as the breadth of it might not be what we've seen. It might go a little bit deeper, but it's a requirement for our global economy to function. We have to invest in it and in new things that are coming out of it. So
Yeah.
I guess I do. We're going to start to see more.
I agree that too. I think the last 2 years or so, as things seemed a little quiet, it gives them a chance to actually work better on the fundamentals and get their house in order. So next year is going to be interesting because the money hasn't gone anywhere, it's still there. So it will have to go somewhere, right?
Tons of liquidity. That's right.
Yep.
Right.
Also, well, it's going to be an interesting year to look forward to for many reasons. So, but thank you so much for joining me today, Carol. Always a pleasure. And look forward to seeing you next time in person.
Have a great weekend. Good to see you.
Thank you. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision, We'll talk to you next week.